Welcome back, everyone. Today, we're going to cover all things related to patient financial policies and payment options, which will ultimately help your patients move forward with treatment and also make sure that you're going to get paid for the services you provide. This video is for you if you've got an established office or you're starting from scratch and you're trying to figure out what financial policies or agreements you should have in place so your account receivable doesn't go out of control. Here's what we're going to cover in this video: payment policies for insurance patients, what to do when a patient has more than one insurance, payment options you should offer to your patients and what you should watch out for, what you need to include on your financial arrangement/agreement form and what you shouldn't. A profitable dental practice should have written policies in place before providing treatment for patients. These policies should be followed through on a consistent basis to help patients move forward with treatment and to also make sure that you or the doctor is going to get paid for the services they provide, all right? Because nobody wants to work for free. By the way, you can download the financial policy form by going to the link below this video. It's basically a very simple form. It's one page, and the same form I have all of my patients sign as part of the new patient registration packet. The financial policy is different than your financial arrangement or agreement form, okay? The financial policy is simple. It's one page. On the other hand, the financial agreement/treatment plan, financial arrangement plan is basically going to list the treatment that your patients need and how the payments are supposed to be arranged. I will go over this in detail more towards the end of this video, so stay towards the end and I'll cover it in more details on what you should include on this financial arrangement and what you shouldn't. If you're going to accept insurance in your practice, you need to think about and decide how you plan to collect copays, deductible, or any other balance that is not covered by patient's insurance. You're probably thinking, what do you mean? Don't patients just know that they have to make a payment? Well, it depends, because patients may be coming to your practice from other offices that actually used to bill them later for services. So for example, patient comes in for work, the office will generate a claim for those services. Once the claim payment is received, then whatever balance is remaining, the office will then generate a statement to mail at the patient's house. So when it comes time to setting up payment policies for insurance patients, you have two options. One option is to collect the copays, including the deductible, at time of service. The other option is you generate a claim for the services, and once you've received the payment for the service and whatever balance is remaining, you will then bill the patient by mailing a statement. I strongly recommend that you collect at time of service. This is what I've done from day one in my practice. If you decide not to collect copays at the time of service, you're setting up a delay in the collection process. Here's what I mean. Let's say you're doing multiple composite restorations. At the end of the visit, when patient's checking out, they will pay nothing, because what you're going to do is you're going to generate a claim for the services you provided that day, and then you're going to wait to receive payment on that claim. And then your team is going to enter that payment into the practice management software, and then we'll actually generate a statement for whatever balance there is on the account, and we'll actually print, stamp, and mail, which now costs you and your team's time and money. Remember, you're already paying for electronic claim service to send these claims electronically, but now you've added an extra cost of mailing these statements for each encounter for a patient. And just because you're mailing statements doesn't mean you're going to receive payments on time. So now what's going to happen is your team is going to have to track these patients down, meaning they're going to have to pull up a report on your practice management software for patients who owe balance or who have a balance on their account. And then your team is going to have to follow up with these patients and maybe also additionally generate an additional statement and mail it again for these same patients. So by not collecting the copays at time of service, you've actually increased the amount of work your team is doing. And all this work takes time that could have been spent working on the schedule or other revenue generating activities. So my advice from day one will be to collect at time of service. 99% of patients will not have a problem with this policy. You'll have to train your team members to be more assertive and handle such situations to politely enforce this policy of collecting at time of service. Even after doing so, you may have a few patients that don't want to pay at the time of service and would rather wait to receive the EOB from the insurance company. This is totally fine. Since I've started my practice from scratch back in 2013, I can recall probably about 5 to 6 patients that don't want to pay at the time of service and would only pay after we receive the claim and whatever the balance is. So we still generate for those 5 to 6 patients statements and mail them, but we have not had a problem collecting. So we continue doing that. So let's talk about dual coverage. What do you do for patients who are covered by more than one insurance plan? This happens quite often, especially when a member is covered by their own plan and they're also maybe covered by their spouse's insurance. When you provide service for a patient with dual coverage, a claim is generated first for the primary insurance. Once you receive the claim from the primary, then a claim is generated for the secondary insurance. Now, to process this claim, the secondary insurance is going to need the copy of the EOB that you received from the primary insurance. There are 3 different ways you could set up a payment policy for patients with dual coverage. One is to collect at time of service the copay and the deductible for primary coverage only, assuming no secondary coverage. Second option is to collect only the deductible for both the primary and the second coverage. The third option is to collect nothing at the time of service and wait until both claims go through, and if there's a balance remaining afterwards, then you can mail a statement to the patient. I'm not a fan of option number 3, and because I indicated before that I try to stay away from mailing statements to patient's house, and I always try to collect at time of service. I have done both option number 1 and 2. I've found that some patients do complain when they're asked to make a payment because they assume because they have dual coverage, they will have 0 out of pocket, but it's not always true. Over time, I've found option number 2 works best in my office. We don't collect anything on preventive services, especially upon verifying the insurances. We find out that the patient has 100% coverage on both primary and secondary. If the patient needs any work, we will go ahead and collect the deductible on the primary and the secondary coverage only and not collect any copays. We will simply wait to get paid on both of these claims and make sure whatever payment we've got, it totals up to what we were expecting to get paid for all the services we provided. Let's talk about patients with inactive insurance. Patients who come to your practice who have insurance, you're going to be verifying their benefits. So you know what their benefits are before they come into your practice, unless it's a walk-in by a new patient. As you start your first round of recall patients, for patients who are coming back for routine examinations and cleanings, they may have different coverage. They could have a completely new plan or a plan in which a group number has changed only, or they may not have insurance at all. You will find that a lot of times patients just simply forget to tell you that they have new coverage, or they may not even know that their plan has terminated. For example, let's say you just saw a patient for a cleaning, and in 2 weeks, you're gonna receive an EOB stating the patient is no longer active on the plan. Usually you don't even have to wait 2 weeks to hear back from the plan, because if your team at the front is doing what they're supposed to do, they're checking on the claim portal whether any claims are getting kicked back. For instance, here's the portal on Dental Exchange where we check on a daily basis as part of our routine to make sure no claims are rejected. If the patient is inactive on the plan, it will show up right here when the claim is sent electronically. This way you can reach out to the patient right away instead of waiting for the EOB to come back from the insurance plan letting you know that they're inactive. So I have a patient policy set in place where within 45 days from time of service, any patient balance must be taken care of either by giving us new insurance information so we can generate a new claim under the new plan, or by paying the balance in full if they're not insured anymore. Otherwise, the account balance is going to go to collections. Let's talk about the ways you will receive payments from patients for your services. Credit cards. Most patients want to make payments through credit cards. So you definitely want to offer them this option, either through a merchant account through your local bank or third-party merchant account services. Patients will also want to provide payments through checks. Be careful when you're trying to accept payments in form of a check. I can recall 2 patients whose checks bounced after we tried to deposit them in the bank. Unfortunately, they were both new patients. Even after numerous tries of trying to contact them, their balance is still in collection. And since then, I no longer accept checks from new patients, and I only accept them from established patients. Let's talk about third-party payment plans. Third-party payment plans will, upon credit approval, split the entire cost of the treatment plan into 6, 12, or 24 months interest-free as long as the patient makes monthly payments pays off the balance before the promotional period ends. By making it easier for patients to pay, it increases your acceptance rate, but of course at a cost. The company will charge you percentage of the amount financed at the time of transaction. More time you give your patients to pay, more you're going to pay per transaction. I don't have a lot of patients going through these payment plans, but the ones that do, I typically offer anything out of pocket, $2,000 and up, I offer 6 months. Anything above $4,000 and up, I do 12 months. And anything above $6,000, I offer 24 months. The 2 big companies are CareCredit and Lending Club. I've stepped away from using Lending Club since I get a lot more denials of credit through Lending Club, so I usually stick with CareCredit. Let's talk about in-house financing. Collecting payments from a patient over a certain period of time is referred to as in-house financing. You're not going through a third party, so you're taking on the risk of patient not making payments according to a payment plan, even after you having delivered your services. For multi-appointment procedures, for example, like crown, bridge, or denture, or implant, I usually collect 75% of the balance on the day of the preparation and impression, and when they come in for insertion, we'll collect the rest. By doing so, I've offered in-house financing to the patient. When I first started out, for the first 6 months, I actually allowed patients to pay off a crown even over 6 months. I usually had patients sign off on a payment plan sheet, which outlined total amount to be financed, how much we're going to collect every month. We would save the credit card number on file, and then my team would go in and charge that credit card every month for the amount listed on the payment plan sheet until the account balance was fully paid off. This all worked until the work increased on our end, saving the credit card numbers on file, maintaining a separate list of patients with balances and the amounts to be charged every month on a separate Excel sheet, and then going ahead and emailing, texting, or mailing a receipt, a credit card receipt to the patient of the account charge. There were some problems also. I can recall 2 patients whose credit card declined. They forgot to inform us because they changed their credit cards. Okay, so now my team has to track the patients down, play phone tag, get the new credit card info so we can continue to charge their account. Another problem is if the patient cancels their credit card and completely stops making payments according to their payment plan. Okay, so now this amount is going to go to collection. If it doesn't get paid from the collections, the entire amount has to be written off. And for this reason, I stopped offering it after the first year. There have been, there are some patients who've been with us since day one. And for very few patients, I still offer that in-house financing by allowing them to make those payments over 2 months, but I only offer it to established patients that I know. Let's talk about prepayment discounts. I used to offer it in the first year when I was open, but I've stopped offering it ever since because I feel like it doesn't really affect the patient treatment acceptance rate. The whole point of the prepayment discount is to incentivize the patient to commit and move forward with the entire treatment plan so they don't drop off in the middle. So here's some reasons why I no longer offer the prepayment discount. 1, PPO insurances. If you take insurance in your practice, you are probably already taking 30 to 45% write-off, right? It may be even higher than that in some of the lower paying insurance plans. By offering prepayment discount on top of that, you're taking additional 3 to 5%, assuming that's what you're offering, additional write-off. In-office membership plans. If you have in-office membership plans, you probably are offering 20 to 25% discount off of services. And by additionally offering prepayment discounts, you're gonna take another 3 to 5% off of your office fees. Third is life changes. We all have changes in our lives that affect our spending habits. And the same thing with patients. They may lose jobs or they may change insurances. If a patient started with you on a certain plan that you accept and prepaid for all treatment, if they change their insurance to a lower paying insurance plan than their initial insurance plan, and you offered a prepayment discount, it just adds another layer of complexity and something we didn't want to deal with. And like I said initially, it didn't really affect our treatment acceptance rates. Another reason is most patients don't want to pay a full treatment plan fee in full just for a 5% discount. They always keep asking for more discount. So I always try to stay clear of these kind of situations where patients are starting to bargain. Now let's go ahead and talk about financial agreement templates. If it's a treatment plan with few restorations, perio, and few crowns, I have the patient sign off on the treatment plan that is printed from the practice management software. Meaning it's not a contract, but basically the patient understands the treatment that is necessary and it is subject to change. And the cost that is listed is an estimate only, especially if it involves insurance. Do not make financial agreement templates complicated. Keep them simple and limit it to only 1 page. A financial agreement form will list out the following: a treatment plan and the time required to complete it, a payment plan, if there is one, and the amount of monthly payment and the payment term, approximate estimate of the patient out of pocket, especially if this involves insurance, estimated insurance reimbursement for all the services, the date of the treatment plan, and the signature of the patient. At previous associateships I used to work in, I've seen financial arrangement forms that were like 2 to 3 pages long. Do not include an itemized list of 15 restorations, the 3 root canals, the post-in cores and crowns, etc. Don't introduce hurdles when the patient is trying to move forward with treatment. In my office, I discuss finances right in the dental laboratory as soon as I've finished going over the treatment plan with the patient. In your office, you may be handing the patient over to a treatment coordinator who's going to discuss all the finances. Now the patient is going to have to read through these payment policies and the 2 to 3 pages of the treatment plan and the payment options. Can you imagine the overwhelm? I can spend hours talking about case acceptance, presenting treatment plans, Every doctor does it differently, but that's a subject matter for a whole another post. But for now, if you've got a complicated treatment plan for a patient, split your treatment plan into phases. And for each phase, create a simple financial agreement form that is just limited to 1 page. And as you move forward to the next phase, just simply create another financial agreement form. I hope this was helpful to you in understanding what you need to think about when it comes to creating payment options or payment policies before you start seeing your patients. Okay, this is important whether you've got an established practice or you're starting from scratch. And that's it for today, guys. If you found this helpful, don't forget to subscribe and share with your colleagues. And until next time, take care.